name's Marc Principato, and today what I'm going to be covering is the concepts that I talked about. I talked about a setup, I talked about validation, I talked about how to use price action basically to find trading opportunities or anticipate trading opportunities. So today I'm actually going to use chart examples and demonstrate what I was talking about with pictures. Okay, so to begin, I'm going to actually cover a currency. I'm going to look at the euro dollar today, and I'm also going to cover some stocks. So we can get like a little variety. We can see that the method that I use is robust. So first, what I'm going to do is I'm going to talk about like the three elements that basically make this up. So first you have the setup, then you have the measurement, right, to anticipate the support or resistance, and then you have the validation process. So the setup just basically focuses our attention on particular patterns in the market. So we could say, okay, I see a potential setup here, but that's not enough. The second thing is I need to anticipate the levels where I can take action, right? So that's where I do my measurement, and I'll project a support or resistance level from that measurement. Once I have the support or resistance level projected, then I wait for the price to reach that level. And once we reach it, then I look for validation, which is just another word for confirmation. And I have certain criteria that I look for in that validation process in order for me to take the trade. If the criteria is not met, I have no trade to take, and then I look for other setups. Okay? This can be used on different time frames across different markets. The thing is, you don't want to go too short on a time frame, meaning you don't want to be doing this on 5-minute charts. 15-minute is as low as I'd go, and that's even for stocks. Okay? The smaller the time frame, the more noise, and it's much more I should say less reliable when you're on the smaller time frames. Okay, so let me show you the steps now on a chart. So the first step is find the pattern. Now, I'm going to show you an after-the-fact pattern first, okay, and then we see the result of it. From this low to this high, okay, is the beginning of the pattern. This low to this high, then this high to this low is the pattern. See this shape? Now, I talked about this a week ago. This is basically the false breakout. What happens over here in this area is the traders who thought this was a bearish breakout get caught, okay? They get caught in here, and what happens is they're squeezed out of the position, as you can see. Now this pattern repeats itself often. Now there are some variations on this pattern, but this is basically the pattern. So that's the first thing you're looking for. Of course, when you're anticipating this, the full pattern is not there at the time, okay? At the time, the only thing you see is this at the time, okay? You see like, basically a low to a high. And then you have lows that you can measure from. And you say, okay, I'm going to measure from these lows, right? And then when you measure from them, okay, and you reach one, that's where your setup takes place. This is where you're actually looking to take the trade here. So all this has to happen first. And this is an hourly chart, so this is a lot of hours that you're waiting in this case, okay? But when you reach this area, this place where you anticipated a support, now you're looking for validation here. And I'm going to talk more about that in a second, but we do have a form of validation here which actually would generate along at 35.95, and then this trade obviously worked out. But let me show you now what I mean by validation.